turning attention to some corporate news over in Nigeria, we had the country's new cement company post a 205% rise in pre-tax profit to 14.4 billion naira. That's the equivalent of $96 million, and for the period to the full year of December. To run us through the company's performance and expectations moving forward, Wole Adeleke, CFO over at Dangote Cement, joins us now. Thanks so much for joining us, Wole, this afternoon. Of course, BCC is controlled by local private conglomerate Dangote Group. We had the company on the surface put on a sterling performance. Run us through the operational environment that has put you in what seems like a very comfortable position right now.
Yes, Alicia, thank you very much for inviting us to CNBC this afternoon. I think what investors have seen from our results today is a taste of things to come. As you will know, the plant has a rated capacity of 3 million tons, and this is just the beginning of ramping up the production of BCC.
Well, of course, we've seen the company supported by a government's focus on Nigeria's infrastructure development plans, and that to a large extent justifying the need to ramp up capacity, like you're saying now, pretty much the way local companies here in South Africa have benefited as well. But given the economic headwinds that economies have faced, to what extent has your project pipeline actually come under some pressure?
Well, I think the PCC projects have been largely completed now. The two lines have been revamped and upgraded. The old lines were rated close to 1 million tons. The new plants, which are revamped and upgraded, is now rated for 3 million tons. Now, elsewhere within the group, plans are underway, and the projects, particularly the Line 3 in Obajana, is slated for completion around the summer next year. The plant in Ibeshe is also planned for completion during the first quarter of next year. So things are moving gradually but nicely also.
So, having said that, in terms of work coming your way and volume sitting on your order book, what are we looking at?
Well, I think if you look at it, the realized demand nationally for Nigeria closed 2009 around about 14.8 million tons, up about 10.5%. And as you will notice from the data in the previous years, we've sort of seen that kind of level over the last 6 years, 10% increase on a yearly basis. And we do not see any indication that this is going to reduce. And so which means if this trend continues for the next 2 or 3 years, we'll certainly find a home for the capacity that are under construction, which hopefully will start to come into the market as from the beginning of the mid of next year. Now, the next question will be what will happen to import. We believe that with all the capacity around the industry coming up, import in some ways will have to be decelerated, as we have seen. Last year, which is 2008, I'm referring to, total import was about 54% of the total demand. And that has switched in 2009. We now have local production accounting for 54%, whereas import accounted for 46%. So going forward, we'll tend to see that sort of reduction in import and local production increasing.
Well, the big winners over the long term, if you speak to some of the market watchers, are expected to be cement players that can leverage on scale to satisfy the expected demand. We've heard news of a possible merger of BCC, Obajana and Ibeshe. How are things playing out in that arena where we would well see then a muscling up of the business? How exactly would a merger play out?
Well, I think it's just a question of reorganization. I mean, there's no point having legal entities all scattered all over the place. I think they all belong to the same division, Dangote Cement Division, and administratively and financially, it's more efficient to bring every of this legal entity under a common roof. I think that's the synergy that is going to be brought on top of the table. As to a merger, I think it's basically a reorganization. Nothing is going to change in terms of industry player.
Taking a look, when can we be expecting to see that synergy being extrapolated from and the business leveraging off that synergy?
Yes, I think what that is going to do for the Dangote Cement Division is that you find that the leverage in terms of being able to talk to financial credit providers is a lot more stronger. We'll be able to negotiate supplies more efficiently and maybe in a cheaper way than each business unit going its own way.
Well, that muscling up happening in what kind of competitive environment, Wole, and what kind of market share are you targeting by the end of the year?
Well, I mean, market share is not going to change. Like I said, I mean, at the moment, Dangote Cement Division ended 2009 with an approximately about 40–45% of the market. Even bringing all the business units together, that is not going to change significantly because the production capacity is not going to change. So basically what this reorganization is doing is basically bringing business units together.
Yeah.